Hello, good day, and welcome back to the Short Vol Show. Always good to have you here, and appreciate everybody checking out my new videos and all that's been going on lately with the channel, and have an exciting, I did an interview for another channel, which should be coming out sometime soon, which I'm very excited about. I think we'll hopefully bring some more people here because we always want more people to come and check out stuff. Anyway, today we have markets. We had a vol pop. Things are coming back in a little bit, sort of, maybe, kind of. But let's see. Actually, VIX now is up 33 cents to 13.86. So things have popped a little more. You could kind of see stuff, setting up to pop. Last week, people were getting nervous a little bit because VIX was up when the market was up. And indeed, things have popped a little bit. E-minis now down 8. If we do actually just take a look at the situation here, and to do that, what I'm going to do is just take a look at the chart for E-minis over the last, couple months, because I think that's very instructive here. So let me get my screen straightened out. There we go. And so if we do take a look at the E-minis over the last little while here, I'm going to go to my active trader tab here. You're going to see that's the story, okay, over the last 6 months. It's a big rally, and you can see it sort of tail off at the end here. The last couple days are a little down, but it's still, we're in the midst of a huge rally. Okay, so this is a little bit better chart. This is a week, 10-day chart. And you see it's selling off a little bit, but we're still in the midst of a huge rally. So don't get it twisted out there. Yes, this could be the beginning of a huge down move, but at this point, it's not. It's just a little pullback. So I like to actually just back out my charts a little bit so that I can keep in mind a little bit bigger picture. Interesting talking with Stephen Aniston, what was it, maybe a week ago now. And, he plays things in the big picture. He's been basically in cash since October, waiting for, better opportunity to enter the market. You can't get too caught up in the moment. Was looking at option alpha video on relativity, talking about, okay, well, yesterday I lost money on a trade, so now I'm real gun shy. Or yesterday I made money being long premium, so now I'm going to be long premium from now on. Getting caught up in the moment. When you're doing trades with probability, you got to trust those probabilities will work out for you over time. And if it doesn't work out for you in the short term, it doesn't mean the probabilities are wrong. It just means that it didn't work out in the short term. If you're doing stuff with probability, always it's a situation where as the number of attempts goes towards infinity, then your returns are going to start to mirror the expected returns. But if you're just doing 1 or 2 trades, you're not always going to get the expected returns, of course. It's like flipping a coin. Anyway, always gotta love StockTwits, huh? Got a StockTwit tweet, a StockTwit twit. I don't know what it's called today, and I had sold my Afria stock, and I said, to them, I just wrote on there sold my stock, and this guy wrote back, people post stuff like this they are worried about their decision and hope to scare others into selling too. Then he put, not me too. So I guess this guy was trying to be a wise guy, saying I was trying to scare others into selling the stock. And I wrote back a somewhat detailed response to him saying, it's not that I'm trying to influence other people to sell with me. It doesn't affect my P&L whether other people sell or not. I'm just posting that I sold the stock because some people kind of follow what I do sometimes on here. And, I'm the first person to be a proponent of don't follow a guru. Don't pick somebody who you think is a good trader and try to follow what they do, because it's not going to work. I don't try to tell people what to do. Actually, that's not true. I sometimes try to tell people what to do in the VIX products. I point out when we get a pop and say, this might be a good time to short stuff. But beyond that, in regular stock issues, I don't try to influence what other people do, because I don't know what's going to happen. I don't know really what's going to happen in the VIX either. It's, as a YouTuber, for me to like put it out there and say this is going to happen for sure, I'm certainly going to be proven wrong in the future. So that's a silly thing for me to do. I don't know what's going to happen. Anyway, so but always fun to interact with people on StockTwits. I found the ADR for Porsche. I was thinking, I like Porsches. I should look at the stock, and so I pulled up this one for Porsche. It looks like I guess StockTwits is now doing ADRs to some extent, because this Porsche one, I guess I'm the first follower of it on StockTwits, but I guess they're covering some of these issues now, which is kind of interesting, because before they didn't really cover them. So let's look at the market for a second here. So I did start the series of sort of individual videos on individual topics called Trader Talk. I'm going to continue with that, but what you're watching now is live stream for the short vol show. So this is going to be analysis of what's happening today in the markets with a focus on VIX and VIX related items. So let's get to it. VIX up 27 cents, trading indicated 1380 right now. I didn't mean to say trading. And what you'll notice if you pull up VIX Central to look at the term structure today is that we are still in contango of over 7%, even with that big up move. So the structure here had the ability to absorb this up move, and it really hasn't blinked at all. 7% decay per month, even with the up move in here. So, and the term structure does not seem to be, spooked by this. To be spooked by this, you would see us going to backwardation. You would see spot way above stuff. But if you look, looks like a very normal curve here, other than the fact that the spot is a little higher than it was a couple days ago. Going back to the individual futures, today we have the front month up 7 cents, second month down 5 cents. So the VIX not even really blinking. The roll yield, the difference between the spot and the M1 has been notably wide for this time of the month, the last few days. And it turns out that they were sort of anticipating this move, because now the roll yield is, let's see, well, spot's 1380, and the front month future is 1462. So still very wide, buck 80. So still very wide. So VIX up 28 cents. There's going to be somebody, I guarantee today, on StockTwits who's going to say, this is rigged. UVXY should be up more than 11 cents with the VIX up 31 cents. No, UVXY is not based on the VIX. It's based on the futures. And so futures up now, I'm showing front month up 9 cents, second month down a penny. So with futures hardly up, UVXY hardly up. Makes sense. Now I'm showing UVXY up 10 cents. So term structure, the roll yield was high, and I guess in this case what that was because of was that futures guys thought that maybe we were going to get a pop sometime soon, possibly because they never took the futures down to as low as spot was moving downward. So so a very good spot here, in my humble opinion, a very good spot, especially earlier this morning, to jump on board if you do want to play the short vol trade thing. Even with the pop decaying at 7% contango is nothing to smirk at. That's real decay. VXX right now 29.74. It did get all the way up to like 30.60 something. Let's see what it got up to. If I pull it up here. No, I suppose I'm losing my mind. I meant 29.60. But yeah, it did get up to almost 30. So, good spot to jump on here, I would think. I did do I just did a one lot spread just playing around this morning. Excuse me. I did the NOV 28.27 spread. So that spread can be worth $1. I paid 60 cents for it, 62 cents, I think, for it. It's worth $1. Fairly conservative trade. So if this is below 27 in November expiration, then I'll make $1 minus 62 cents. So 38 cents on that trade. If you're going to want to short stuff, this is a time when I would jump on board to short volatility because I think, excuse me, I think it would be profitable for you. And what I would be looking at is maybe the October 31.27 put vertical. So you buy the 31 put for 415, sell the 27 put for 153, something like that. I'm sorry, in the middle. So you pay $2.50 for this spread that can be worth $4, and I think that would be a great spread to do. If you want to be a little bit more conservative, which nothing wrong with that either, go out until November. You got 77 days, okay? So at the money is 30 strike or 29 strike. You could go down to maybe the 27 strike even, I would say. So buy the 32 put, buy the 31 put and sell the 27 put. So you're paying $2.61 for a spread that can be worth $4. So if you do this 10 times, it's a little over $2,500. So do it 10 times, it costs $26.50. So you're betting $2,600 to make $1,300. That's a pretty good return for a couple months, folks, and it's a very reasonable trade because 7% contango. Okay, so let's say you've got 7% contango. Now it could be greater than that because remember we're in a pop now. So if you do, let's do some math here. So 7% of 0.07 times stock is around 30, so times 30. So 7% times 30 is 2.1. So if contango stays here, this is going to go down by about $2 a month. Okay, so 77 days. Let's call that, we're being real conservative here, so let's call that like, let's say over 2 months. Okay, over 2 months. So that's $4 lower. So 29, 28, 27, 26, 25. So conservatively with contango here, this should be around 25 2 months from now, all things being even. And VIX is in a VIX is in a mid range right now. Let's take a look at VIX. I mean, it's slightly elevated, but in a kind of a mid range for where it's been right now. Okay, so kind of in a mid range. There's the 180 day. It looks like in the middle, right? Okay, so if contango stays what it is, this thing will go down $2 a month. So very, very reasonable that by the end of November, it's below 27. According to this, it will be 25, according to our math. So very, very reasonable trade to put on here. You've got plenty of time to weather spikes and that and whatnot. If you do want to be more aggressive, let's check out that 25 strike. So let's say, let's go to VXX again. Then we're going to buy the 29 put and sell the 25 put. All right, more aggressive trade. So you're paying $2.20 for a spread that could be worth $4. So let's say we do this one 11 times. Doing that 11 times would cost just under $2,500. It would be $24.42, and you'd make almost $2,000. So you're paying $2,500 to make $2,000. So coming close to doubling your money in a couple months on this trade if it comes through. And if we do the calculations like I just did for contango, if vol stays around here, it will come through, and you'll almost double your money in little under 3 months. So I think that's a great trade to look at for you here. And the thing is, you get a move. You don't have to carry this trade out till expiration necessarily. You get a little move down, and you can take it off for a less of a profit, but take it off and move your money elsewhere. Okay. I like doing the live stream because it is a little less pressure for me to be real concise in what I'm talking about. So, let's see what else we got going on right now. Let me take a look at, I'm going to open a new page for a watch page here. Okay. Hi, chat. How you doing? Let me say hi to my chat here. Hi, chat. And yeah, so I think it's a good time to put on a short vol trade if you are so inclined. What do I have going on right now? I've got this RH spread on. Okay, so let's take a look at that. It's kind of like the elephant in the room for me because I put this on. I was attracted by good numbers for decay, and I put it on a little bit, and it's basically nothing good has happened for me yet. I'm down $300 on the trade so far. But, it bounces around. I was up, marks bounce around every day from up to down, and so it moves. Now it says down 270, so it's all over the place. But RH, okay, what do I have on? RH, I have a calendar spread on, so let's take a look at this. You can see my position sort of at the bottom of the screen here, but essentially the majority of my position is in RH, which is a fancy furniture type home furnishings company. I am basically long the September-October calendar spread. So I'm long October 155s and I'm short September 155s. Okay, why did I do that? Well, October volatility right now, if I switch my screen up here, on Thinkorswim, you can switch your screen to show implied volatility. So options volatility. October shows the 62 vol. So I figured I would buy 62 vol in October, and I would sell 95 vol in September. So I'm buying cheap vol, selling more expensive vol. Now, just those two things alone is not necessarily enough information to really jump into a trade. And when I did put this trade on, it was actually like September vol was 80 and October vol was 65. So when I look at my position, which isn't a huge position, it's a few $1,000s, but it's not huge. If I analyze my position here, okay, it shows me collecting $439 a day in theta. But the thing is that none of that decay has come in at all. And I've had this position on for a week, and I haven't collected $1 in theta. In fact, every day what happens is the volatility of the options I'm short goes up, and the volatility of the options I'm long goes down. So essentially, nothing is going to move here, I don't think, until earnings come out. And earnings come out next week on the 4th. So essentially, I will have Tuesday. We're off Monday, and earnings come out Tuesday after the close. So I will have Tuesday during the day to figure out if I want to sort of take this off. But it's projected to make a move on earnings. And so if we look at our Thinkorswim platform here, if you look right above my head, you're going to see these numbers. It says like 124%, 95%. And then to the right of that, it says 23, 24. That is what the expected move is by that expiration cycle according to the straddles and options prices. So you see by September 7th, it's predicted a $23 move. So the options are saying it's going to have an average of a $23 move in the next week. So that obviously means when earnings come out. And then if you keep going down, between the difference between the move in the next week and the move by October expiration is 24 versus 30. So there's $6 of move between next week expiration and October expiration. In that 42 days, there's only a $6 expected move in addition to the 23 that's supposed to happen before expiration. So the options are saying this is going to get up and jump. All this data that is not coming in is kind of stored up in that straddle. So what's going to happen is earnings going to come out, and this thing's going to pop according to the options. And the question is, does it pop so much that I don't make money, or does it not pop that much and I do make money? I don't really like to be in that situation. My thought was that this data decay would come in somewhat before earnings came out, at least a little bit. And indeed, if I go over here and I run my sheet, and I run my sheets ahead of time a little bit, the Analyze tab, and let me move myself over so you can see this, because this is interesting here. Okay, so and let me move this up so you can see this better too. All right, that's better. So if you look over here, I can move the date forward, okay, to Monday or Tuesday. So if I move this date forward here, you can see the theta decay is going up, and it's showing, so if I move it to the 4th, it's showing P&L for the day with this not moving of 1900, almost $2,000. So I sort of have $2,000 in the bank, quote unquote, to protect me against the move. And so all this money is sort of building up. It's all in the straddle, and basically either that's going to be enough to protect me against the move or it's not. And so I have to decide kind of the day of, I think, whether I want to keep this position on or not. Now, it would be easier to decide if over the weekend some of this decay could possibly come in. If $1,000 of decay comes in, then I might want to just happily take the winner and take it off. But that's where we are. So when I looked at this a week ago and I saw $300 a day in decay for not putting much money out, I was kind of scratching my head saying, wow, is that too good to be true that someone's just going to pay you $300 a day on your money, 10% a day on your money? And so it's not surprising to me that it was kind of too good to be true, and that this is all just kind of building up in anticipation of earnings. Now, I think you might remember the interview I had with Kim Kleiman, who was talking about plays before earnings. And one of his favorite plays is to buy straddles or buy premium like the week before earnings. And in this case, you could have bought calls or straddles in the week before earnings, and you basically, they would not have decayed that whole week. And you could have scalped back and forth. Now, the problem with that strategy with this stock is this stock has not moved at all. So even if you were long options, it wouldn't have helped you because this isn't moving. In fact, if we go here to our Analyze tab and we look under Statistics, if you look under the current HV percentile, that's historical volatility, how much the stock has moved, it's at 2% percentile. So this thing is not moving at all. It's just sitting there. But it's probably going to make a big move on earnings. If we look back at the chart here from past earnings, and I've managed to put my head right in the way of things once again, you see this thing it gapped from 100 to 164 on the last earnings, which is a huge gap. Now, this huge gap is the reason for why the straddle is so huge right now. So I'm trying to find ways to kind of buy my wings, protect me against a really big move here. I've been modeling my position. I can go under the Analyze tab, and I can mess with these offsets, and I can model my position up 20%. I can model it down 40%, up 40%, and see how much I make or move or lose. And to do that, I move the day ahead. I can move it to like the expiration and show how much I'll make or move. So if it goes to 227, you know, I'm pretty much smoked. It shows here me losing $2,900, which is basically the whole amount of money I put into the trade. That's up 43%. Down 36% with this trading 100. Let's see, down 40%. Same thing, smoke, losing $3,700. So, not great in a huge move either way, but that's the risk. That's the risk I'm taking in this, and I don't love this risk. So my plan for this was to, once again, collect some data ahead of earnings and then get out right before earnings. And I still might do that. And even if I'm breaking even, I still might do that or reduce, because I don't like those numbers of, you know, losing all the money that I have in this trade for a huge move. But it's something I'll have to decide over time. Anyways, I hope that isn't too boring for you as far as like what goes through the mind of somebody trading one of these things. Let's take a look at Squarespace for a second, because this thing is a monster. Look at that. That's what you call whatever, you know, the latest thing is called everything parabolic. Well, that's what you call a parabolic graph. Look at that explosion. And this is based on a lot of good news for the company, of course. But, I mean, can anything continue like that forever? I wouldn't think so. You know, I was sitting there saying, you know, I should buy some calls. I should buy some calls, and I never did it. And now it's like, I don't know. Now I want to buy some puts. But are these kind of charts, are these symptomatic of a market that is going to, a boom bust market that's going to crash at some point? Some people would say that they are. You know, people getting in, people trying to get in, chase that return. Or does this keep going higher? It's hard to say. But definitely an interesting chart. If we look at our canopy growth, that was parabolic 2, and now it seems to be sticking in one spot. Now, does this launch higher from here? Does it back off? Once again, hard to say. APHQF. Okay, this one I did participate in the rally in very happily, but I did sell today. If we look back to December, I did participate in that rally in December, and I did sell it up around 17 or 18 and was happy that I'd sold it. This time, I'm thinking back to then and saying, well, this can get taken over, and if it does get taken over, like the rumors that it's in play with the Adagio, I would hope that we get a pullback before then and I'm back in before it gets taken over. But in the meantime, I did get out because I made a very nice profit in this, and I want to keep the money. So I'm out. As we talk, the E-mini's rallying back a little bit, which is good to see. Appreciate you all watching. Appreciate all your support. Appreciate the new Patreon people supporting me. And I'm here to answer questions. I've got a whole string of people that are going to be doing videos in that new Trader Talk series, answering basic trading questions from viewers about anything you want to know about either being a market maker back in the day or trading as a professional, down to specific strategies. So stick with me on that. Please, if you haven't subscribed, please subscribe. Check out the Facebook group. Check out the Twitter. Website is getting revamped, but I'm excited to get that going again. I want to have it like your one-stop shop for everything VIX related. And VXX 2971 right now. Good time to get on board in the short vol scene. It will work for you folks, even with the VIX up. Still in contango, meaning this stuff is still decaying. So good time to get in. It's funny because you get a little scare and vol becomes bid and starts going higher, and everything you start to read is people that are interested in buying this stuff, and like, oh, it's doom and gloom and scary. And at the exact time when you need to be slowly scaling into a short position, people get scared and they start to read everything around them, and everybody cheering for this stuff to go higher and VIX to be bid, and it's hard to initiate, because you have to kind of go against the flow of things to initiate a short position. It seems much more easy to initiate a short position when everything's down, vol's near the low, and everything's in the dumps and nothing's happening, because it seems then that it's better to initiate a short position. But this is a much better spot here. I did initiate a short position here with VXX around 30 a couple weeks ago, and it went right back down, and I got out of it. And I'm going to initiate a short position here again. And it might go against for a little while, but with 79 days to go, I've got time to weather a decent-sized storm. A month storm could be weathered easily. So there you go. Thanks, everybody, for watching and joining me today. And I hope you have a great weekend. Enjoy the day off. Take that day off Monday and don't look at the markets for a sec. Get out. Enjoy the rest of the summer. It's still nice out, at least here. And relax so that you can come back fresh on Tuesday for the week ahead. Thanks for watching, and I will see you in the next one. As I put my Morse back on. Oh, I did want to say just one more thing, folks. We do have a contest on StockTwits every Friday where you guess the where UVXY will end. So if you are part of that competition, I'm going to attempt to clarify the rules as I understand them now. As far as I understand it, the rules are that you need to post a guess for UVXY that is not within 4 cents of anybody else's guess in the group. And I am trying to post the winner every week on the show on a Monday. But every week we bet on, or not bet because there's no money exchanging hands, but we guess where UVXY is going to end the week. And so if you want to be part of that, you can probably post publicly on the StockTwits board, and somebody will add your guess to the other guesses. I suppose as we get more people, we may have to tighten that up from 4 cents to 2 cents, but I am certainly not in charge of the rules. There is sort of a hierarchy of rule creators, including Prof and Ron Turkey 1, and it kind of the hierarchy kind of goes down from there, me being somewhere on the bottom, as I don't think I've ever won this thing before. But anyway, I do like to publicly acknowledge all my StockTwit buddies, and congrats to all past winners, and good luck for everybody today on that whole contest. So thanks again, and we will see you next time.